Hello and welcome back to Game of Trades, your number one channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the SP 500. We've had quite a nice correction here from the all-time high. I believe this is a almost 8% correction from the all-time high in 2021. This was just a beautiful setup here at resistance with momentum showing us divergence between higher highs in the price, lower highs on the RSI, a nice wedge pattern forming. We also had quite a lot of divergence between the price and the actual breadth of the S&P 500 leading up to that big top. I don't like to say things are obvious in the market because they're often not. The markets are very often very difficult to navigate, but this was quite an obvious top, quite an obvious local top, despite a lot of people here calling for the beginning of a melt-up move, calling for the beginning of a parabolic move in the markets. I can't tell you the number of YouTube videos and tweets I saw saying that, it's done, the blow-off top is here, and we're about to see a 20% move higher in the stock market following this breakout here, right? Now, again, I don't like to brag about things we've done well. We've gotten things right before, we've gotten things wrong before. But if you were with us here at the very end of 2021, we called that false breakout and the fact that we'd likely see a revisit of the 200-day moving average. It has happened. We're now here. We're now testing that moving average. And now we're seeing a bunch of people calling for this to be the end of the bull market. And now that this price channel that we were trading in throughout the entire year of 2021, now that it's been broken, there's only downside left 2022. Of course, you come and watch these videos to keep your analysis level headed, to keep an objective outlook on the stock market, and of course make a profit in these crazy markets where everyone seems to have a different opinion. If you're interested in following these markets with us, make sure to click on that subscribe button. If you appreciate the effort that goes into making these videos and the convictions and research that we provide, make sure to click on that like button. It's not always easy having convictions on the market and putting them out online. There's a lot of criticism, a lot of negative comments as soon as you disagree with the common narrative. So if you appreciate these videos, make sure to let us know by clicking that like button. It is really appreciated. And now, without further ado, let's get right into it. All right, so I want to begin this video by just saying that the goal of these videos, the goal of our strategy isn't to call tops and bottoms within 1 or 2% of the actual reversal point. That's not the point. Now, sometimes we will get that local top or that local bottom perfectly like we did here, but that's definitely not always the case. What we aim to do in these videos is give you guys what we think is the current risk reward on the market right now. So, back here, the risk reward was extremely poor, lots of divergences, lots of things pointing to the fact that we'd see a correction. Now we've seen that correction. We're coming in to the 200-day moving average here. And if you look at things like the fear and greed model, you take a look at where we currently are on that model. We're back in extreme fear here. That green line here corresponds to periods where the market is extremely fearful. So that often coincides with very significant bottoms in the market, because that's moments where you get a breakdown, you get additional volatility, you get put-call ratios that begin to spike and show there's a lot of fear. And that's typically the moment where you want to be entering the market. And that doesn't guarantee that we'll get the bottom straight away, but it does tell you that we're at a much more favorable point than we were back here in November or even in late December right here. Now you take a look at the VIX, right? We're breaking out again above this upwards trend line here that we had. So maybe we get a little bit more volatility, but in general, right? In general, you want to be buying the S&P 500 when it's volatile. That's what we say every time. You can go back on all our videos. Every time there's a spike in the VIX, We tell you guys, this is not rocket science. It's just about being systematic and keeping your emotions away from your trading, away from your investing. When you see volatility, it's typically a good moment to be entering the market. We can also take a look at the breadth, the percentage of stocks in the SP 500 that are above their 50-day moving average. Let's compare that to the actual S&P 500 chart, and you can see every time you get into this zone here, into oversold territory in this zone, you get a big bounce on the S&P 500, right? We're not going to go through all of them, but it very often coincides with bottoms. So that's another way of looking at the risk reward here. Now, it's not perfect. Look at this, right? I'm going to give you an example of where it wasn't perfect. You shouldn't think that these indicators are absolute, right? Here, you've got this indicator dropping down. You get a local bottom, and then you get a brief undercut of that low before you ultimately get a big bottom. So could we get that type of scenario? Absolutely. In fact, I would favor that type of scenario instead of a V-shaped recovery here. Also, take a look at the tech sector. Okay, this is not the tech sector chart, obviously. This is a chart that we often take a look at, and that is the NASDAQ 100 divided by the S&P 500, right? So you measure the performance of the technology index against the broad market, and it tells you when tech stocks are crashing more than the rest of the market. And you can see since the end of November, we've had this big correction in technology. And so that's brought the market down. This is something I often say. In today's market, at least in the current market environment, we've had a stock market that's been pushed by the technology sector for the last 14 years, for the last 20 years, in fact. Ever since 2002 here, near the bottom of the dot-com bust, you had tech outperform the S&P 500. And we can take a look at the S&P 500 on top of this chart, and you can see every time there's a correction in the tech sector relative to the rest of the market, every time it coincides with a period of volatility on the S&P 500. It's not always a big period of volatility, but it is volatility nonetheless. You can see it systematically triggers volatility on the S&P 500. And we're now starting to get oversold readings on this chart. We're getting closer to big levels of support here. This is big support where buyers typically step in to buy tech stocks. So I think this shakeout that we've had throughout the past couple of months is soon going to be coming to an end. And remember why that is, right? Remember what's causing all this. What's causing this market shakeup, especially in the technology sector? It's rising yields. Let's take a look at the government bond yield. The 10-year yield has been an absolute tear recently because bonds have been just so unattractive, right? We've discussed that throughout this entire period. If you've been watching our videos, you'll know that the 10-year yield was extremely likely to rise in an environment with 7% inflation. Who would want to hold bonds when there's 7% inflation? So that's what's causing a large part of the move up in the 10-year yield. It's foreign bondholders selling their bonds, pushing yields higher, and that's causing a little bit of volatility on technology. But you can see this move is now a little bit overextended, right? So maybe we get one more thrust up on the 10-year yield, maybe make that same type of wave pattern here that we had back in October, right? We have one more wave up in the 10-year yield before we ultimately begin to consolidate again throughout February and March. I think once the 10-year yield begins to consolidate and have a technical correction, that's going to fuel massive rallies on the S&P 500 because all the money that's been coming out of the bond market, right? This is TLT, all the money that's been flowing out of bonds, just like money was flowing out of the bond market in 2020 and 2021. It's going to end up in the stock market. It's going to end up in Bitcoin. It's going to end up in small caps and fuel big rallies. So what's the summary here? The S&P 500 is becoming more attractive. It's nearing oversold readings. There's a lot of things that point to a better risk reward now than we've seen throughout the past couple of months, throughout November and December. I bet that you guys got sick of me being bearish throughout this entire period, because we were bearish short term on the stock market throughout this entire period. Now I think is the moment to begin switching to a more bullish outlook again. Now, don't get in a rush, right? You've got still a short-term downtrend here. There's a nice downtrend line resistance here. Perhaps we see a brief dead cat bounce, another undercut of the low, come down and test that level of support at 4,375 points. Maybe we get divergence between the price and a higher low on the RSI, just like we did right here in September of 2021. Right here. And that could coincide with one final move up in yields. So again, remember what I said at the beginning of the video, we're not trying to time the markets within 1 or 2%. We're trying to get the bigger moves. A lot of people here are saying exit the market. The Fed is tightening and the market is going to panic from now on. We're not in that camp. I think there's still more upside in this bull run. I'm not going to go too deep into it, but you can check out some of the recent videos that we made. We have a lot of different videos on the stock market. The titles don't look bullish because every time we make a bullish title, the video gets absolutely no views. But you can check out a lot of these different videos on the S&P 500, and we talk about the bullish macro environment. We talk about the fact that there's a lot of reason for this bull run to continue, and in fact to continue very likely in an aggressive way in the next few months, leading us to much higher highs than what we saw in December of 2021. So I think investors who are flipping bearish here are making a big mistake. At least that's our opinion. If you disagree, make sure to leave a comment down below to share your side of the argument. We always love the feedback. And also don't forget to visit our website at gameoftrades.net. A lot of the trades that we've been looking at throughout the past few months, such as emerging markets, cryptocurrencies, some of the commodities, a lot of these trades that we have on our trading watch list, I think are going to play out over the next few months, especially as we see a recovery on the S&P 500, because when the S&P 500 is trending up, a lot of the risk-on assets have room to run. So I think the next few months are going to be extremely profitable for us. If you're interested in taking a look at our research, click on the link to our website down below, and you can test out our free trials. Take a look at the articles, take a look at our watch list, and see if you're interested in the service. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash that like button and subscribe to the channel. Now, in the meantime, I wish you good luck on your trading and see you next time.